be where's the catalyst going to come for an extension of this rally. And I think there could be a couple of things that will finally drive this rally further. In the nearer term, certainly if resources can turn around and start rallying, they'll help. But I think what we're going to need to see is some improved company earnings. And so far, what the expectations for full year 2013, pretty soft company earnings, only around 2 or 3% growth. So an underperformance in terms of the US corporate earnings, which is interesting considering since those June lows, the Aussie market has actually slightly outperformed the US. And if you actually ignore resources, we've significantly outperformed other global markets. So over the next few months, we could see a bit of a consolidation period, given that the market is sort of at that fair value. Once earnings do start to pick up, I think there's an expectation 2014 could be a much better year for company earnings. Now, when company earnings do tend to pick up, you see the market move ahead of that. So maybe the second half of this calendar year, June through December, we could start seeing the market pick up ahead of some better company earnings through 2014. But yes, I think quiet day on the market today.
Tim, just regards potential correction on our market, we were speaking to Michael McCarthy from CMC Market Stockbroking, and he was reasonably bearish. So he did think we'd probably see that 10% drop that constitutes an official correction. I mean, he was looking at potential levels on the S&P ASX 200 of around 4,600. I mean, is that something that you could see us realistically hitting in the near term?
It's hard to say. I think all the calls in the market recently for a correction has only been for a shallow correction, something like 5%, and that's the biggest correction we've seen over this rally so far. But we could well see a bigger correction. As mentioned, I don't know where the market's really going to get its leads from over the next few months. I mean, I think this Europe mess will just continue to muddle through there. I don't think we're going to get any significant downside risks from there. But after the market has run up so hard, some of the sectors which have run the hardest and pushed this rally, like the banks, which make up a significant chunk of the market, something like 25% of the ASX 200 market cap is the big four banks, and they've really pushed that rally. Now some of the brokers looking at saying that valuations are a little bit stretched there. So if some people decide to start taking some profits on the banks could certainly be a driver of the market moving lower. But technically, I think just the rapid pace that the market's moved up over the past 9 months, I don't think we've really seen a rally this fast or this rapid over the past few years for quite some time. So that would be cause for a bit of a correction.
Now, Tim, as you're standing there, I don't mean to be childish, but that chart behind looks like spaghetti going one ear and then out the other. What is that chart behind you today?
I think that's just it's just the daily chart of the market.
Okay, daily chart. So we're lower. Yeah. That's what we know.
Yeah.
Maybe I've eaten too many Easter buns. It's all right. Okay, that's fine. We're just wondering what the chart was. Perfect.
Yeah.
Okay, thoughts then on the companies that you got out today. What are you looking at?
Looking at the Nufarm result, which was released after market today, market never likes a cut to guidance, so I would expect Nufarm shares to have a bit of a tough day on the market today. The first half result wasn't particularly good. Net profit was down 50%. Underlying earnings were up, but you look at this company, who is an agricultural chemical maker, herbicides and pesticides. It makes the majority of its earnings here in Australia. It does have international business as well, but the weather conditions here in Australia have not been good for the company recently. It's been hot and dry, which is not good for their sales business. So earnings have struggled here in Australia. Internationally, the higher dollar's not helping their competitiveness or their offshore earnings either. So you look at what the company said. They've said that their underlying earnings now for the full year 2013 are only going to be 180 to 190 million. So that's about 15% below where consensus was. So guidance coming in below consensus with the market should see the shares sold off today. After this first half result, it looks like the second half is going to be a bit of a continuation. That's why they've downgraded their guidance. So at the moment, really the seasonality hitting Nufarm shares. While if we have a look at Leighton, they've agreed on their sale of their telco assets to this Canadian pension fund. They're going to hold on to 30% in a joint venture. I think this is significant in that it's going to help them improve their balance sheet position. Debt for Leighton was up around 49% mid-2012. They've managed to push that down to 35% now, but their target band is 25 to 35%. And the sale of this telco deal, we were looking for some further indications from the company in terms of cash flows, but it could see something like $450 million after transaction costs and taxes. So this would push down their gearing by a further 8%. So that would push them towards the lower end of that target range in terms of their gearing levels. But at the moment, the imminent problem for Leighton is their corporate governance issues, it appears, and being able to sort out their board after they've appointed a new chairman and 3 of their directors left.
We should mention it's the final, well, it's D-Day, I suppose. We're not talking.
B-Day.
Oh, B-Day, yes. D-Day or B-Day for Billabong. What are we expecting here, Tim?
Look, I'm not very positive on Billabong. I think the share price has indicated what is expected to come out of these two deals. I think due diligence was due to end at the end of this week or today. So they've got obviously two offers on the table at $1.10. But what we saw in Billabong was two earnings downgrades in the space of 2 months, of which they were after the initial $1.10 offer was created. So I really don't see a formal bid of $1.10 coming through from either. I would be surprised to see probably any bid above sort of 80 cents come through from either company either. The problem for Billabong will be if one company does drop out of, I suppose, the race to take them over. It leaves one company with a bid on the table, and it does create the opportunity to somewhat low-ball Billabong in terms of a takeover in terms of offer price. So you look at what the market's pricing in. I can't remember exactly where Billabong shares are, but I think they're around 80 cents or something like that. So I think that's a pretty good indicator of where the market might be thinking if a formal bid comes through. It could be around that 80-cent level. But really, you look at where they are at the moment, Billabong, they've been trying to turn around this business. Earnings downgrades, revenues continue to fall. It's in a really tough space at the moment.